What's up, my friends? In this video I'm going to help you understand how you can analyze FII data and how to analyze open interest data in Sensibull. This is like super simple, awesome, super helpful to make money from derivatives market. If you don't have Sensibull, I know it's going to be super hard for you to make money from derivatives market, because I've tried both and I know it's better with Sensibull. Guys, knowing open interest data is crucial for you to do intraday trading, and if you don't know how to do it, watch this video, because in this video you're going to learn how you can analyze open interest data in intraday time frame and take your positions accordingly. So watch out for this video, guys. It's going to be super helpful for you. Now let's get started. Folks, now first let's look at how you can analyze FII data using Sensibull. You have these four options. You have trade, analyze, watch list, and positions. Click on analyze, click on FII data, which is the last option over here on the left. Click on it and you will get to this page. So what you can see here on the left is the outstanding open interest of FII in index options. So this means both Nifty and Bank Nifty. So what outstanding open interest means is that so far for this month June expiry, this is the kind of calls and this is the kind of puts that they have been adding, and this is the, like, it's the existing open interest in the market. So this will give us a view as to what the FIIs expect from the market. So if you see, this is the call side and this is the put side, and we can actually understand how many calls are long and how many calls are put, so we can find out if the FIIs are expecting the market to be bullish or bearish. So for example, if you see right now, there are about 5.16 lakh long calls and 4 lakh short calls. So the long calls are more in number, and the number is 1.17 lakh long calls are there in the market. So there's some FIIs think that the market is going to become bullish. At the same time, if you see over here on the put side, you have 5.77 lakh long puts and 3 lakh short puts, meaning there are more number of long puts than short puts. So not all FIIs will have the same opinion. Some will think that the market's going to go up, some will think the market's going to go down. But if you look at the number, 2.71 lakh quantity of long puts exist in the market, meaning that more people expect the market to go down. They have a bearish view. More number of contracts have been are on the put side, giving us the expectation that the market can become bearish. Next is the this is actually intraday activity, what they did on the last trading session. So this won't be actually very helpful for us, but anyway, if you want to understand how to read this, let me tell you how to read this. So this is the call side data and this is the put side data. And call side data, you can see how many long calls they went. This is also index options, meaning Nifty and Bank Nifty, a sum of both. So long open interest, that is long calls, has been added over here, and this is long build up. So 95,000 long calls have been added, and 65,000 short calls have been added. So the number of long calls is more, meaning they expected the price to go higher, they expected the market to go higher, so they were bullish on Friday. Coming to puts, they had about 58,331 long puts, meaning they expected it to go down, but at the same time they had about 61,025 short puts, meaning that they did not expect the prices to go down, meaning they were bullish, right? But if you look at the actual number, the short puts is more, even though it's not a very big number, but it still means that they were bullish, because they were shorting puts, not expecting the market or the price to go down. So this is something that you can learn from this FII data, and it's going to be super helpful for you to understand what the FII's mindset is, because FII is smart money and you have got to trade in the direction of the smart money if you want to be smart. Next, we will move into open interest data and how you can use open interest data to analyze and take intraday positions. Okay guys, if you click over here, you can actually change the underlying whatever you want to choose, whether it is Nifty or Bank Nifty, or if you want to go for some kind of a stock, you can go for it. All these are F&O stocks. So let's say you want to check Tech Mahindra. So the founder of Sensibull himself, he says that the open interest data for stock options can be quite manipulated, so don't go by it, is what he says. But I've seen that it sometimes works. But let's go by the founder. You can use this for Nifty and Bank Nifty, although I use it for stock options as well. So what this means is that if you have a lot of red bars, it means the market is bearish, and if you have a lot of heavy green bars like the one that we have right now in Bank Nifty, like these kind of bars, it means that the market is bullish. Because if the size of the bars are higher than the size of the green bars are higher than the red bars, it means the market is bullish. And if the red bars are higher in size, then it means the market is bearish. Okay, this is just a first initial view that you can have as soon as you open this data. Now let's look at Nifty. So what this means is that this is the intraday movement. So you can see that the intraday movement changes from day to day, and you can even see this, say suppose you want to just look at June 9th. As of June 9th, this is the activity that has happened. So at 16,500 there was a lot of short calls was written more. So this level would have acted as a very strong resistance. At the same time, over here you can see at 16,450 the market was very bullish, and there was a lot of put writing that was happening. So from this level onward, the market could have been quite bullish. Okay, and what about these bars at the bottom? So what these bars means is that, at 16,400 calls were, the calls that were shorted, they were bought back. So there was some kind of a short covering in calls. So what this means is that they expected, the people who had expected that the price will not rise above 16,400 and shorted the calls, they were afraid that the price is going to go higher, and they covered their short and they came out of the trade. So they expect this is bullish. Whenever you have these lines, these red lines over here, it's a bullish sign, and when you have them here, it's actually a bullish sign again. So over here at 16,600, call option was exited. So this is whenever you have them at the bottom, the red bars at the bottom, it's a bullish sign, and when you have the green bars at the bottom, it's a bearish sign. Let's look at another day. So like for example, this one over here, June 13th, right? June 13th, we had a lot of put open interest had changed. Like people who had shorted the puts, they thought the price won't go lower than this level, 16,200. They were quickly exiting. They were doing a short covering because the prices were coming further down. So whenever you have this green bar at the bottom, it's a bearish sign. So this is intraday data. You can see that it keeps changing in the intraday time frame. I'll try to make another video when the market is live. I will show you how you can take positions using this data. Like for example, over here 15,750, this is on this date, this was the spot price, and over here we can see that it would have been quite bearish because there is more call option open interest more than put option, and even 700 there is more call option, and it can keep coming until 15,600. Perhaps it closed around 15,600. But if you look at the overall, this is historical option change. This is intraday data. Okay, and this is historical, meaning this is this month expiry. So as of this month, Nifty, if you see, the spot price is around 15,300, and there are more puts over here. But if you see that, you can see that this side is quite weak. At 15,000 there is a pretty good put option writing, and over here at 15,500 there's a good call option writing, and over here at 15,700 there's a good call option writing. So these levels certainly has good power to hold as resistance, and this level has a good power to hold as support, but these levels are definitely bound to break. So next week, or probably in the next trading session on Monday, tomorrow, we can expect the market to break this level and go down. You will find this in the intraday. When it happens tomorrow, I will try to make a video about that. So if tomorrow, if the call option writing increases at 15,300 level, the put option open interest will naturally start coming down, and it can easily break these levels and keep coming down. So this is like crucial data which you can analyze in live market hours to understand where the next support or the next resistance is. If you don't have Sensibull subscription, then you should get a subscription through me, because you get a really beautiful discount. So if you look at this pro plan over here, you get it at 1040 rupees per month, and you get the light plan at 640. The pro plan, you get plenty of features. You get the strategy builder, you get analyze feature, you get strategy groups, virtual trade, wizard, and you get basket orders. You have advanced option chain, open interest charts, you have signals, stock data, FII data, implied volatility chart, real-time prices, and you also have real-time profit and loss. You also have Greeks basic option chain. You get WhatsApp alerts, you get events calendars, you can look at global events. You'll find you'll find the option price calculator, you have a screener, you have a watch list. All of this you will get in pro. In light, you will not get the strategy builder, so it will not help you to trade. So the pro option is the best option, and you get it at 1040 rupees per month. But if you take it through me, so this is the plan that Sensibull offers for me, and I'm just sharing it with friends who want to take my referral and get this plan. So you get the same Sensibull, which is 1040 rupees, at just as low as 500 rupees a month when you take the 1 year plan, because when you take the 1 year plan, you get a 4 months of pro plan free. Now let me show you this work of art. 84,999 divided by 16, because that's the number of months you will get when you go for a 8499 plan. You'll get it as low as 530 rupees per month, because you get 16 months of Sensibull pro plan when you go for 8499. And if you go for 4999, let's see how much you get it at. 4999, you get it at as low as 624 rupees if you go for a 6 months plan, which because you get 2 months of pro plan free. So you get it at just 624 rupees per month, compared to 1040 with Sensibull offers if you go directly. And if you go for a 3 month plan, which is at 2999, let's see how much you get it at. You get 1 month free, so it's 4 months, so you get it at just 750 rupees. Last but not the least, you get it at just 899, so 900 rupees you will get it at if you go for a monthly plan instead of going for any yearly plan. So if you go directly through Sensibull, you'll get a monthly plan at 1000 rupees, but you get 100 rupees, 150 rupees direct discount when you click on my link and subscribe for Sensibull. Folks, if you don't have Sensibull, then consider subscribing to Sensibull. This is like the this is the best investment you can make for your trading journey, and it's going to be super helpful for you. So if you don't have Sensibull, go for it, get it right now. I will share the link where you can click on it and go for the subscription right now. Okay guys, next video I will see you with something useful once again for your trading journey. Thank you for watching this video. If you have any doubts, leave them in the comment section. I will see you soon. Take care. Bye bye. Have a great day. Subscribe. Don't forget to subscribe. Okay, see you later. Bye bye.